Welcome to ArcisFX Live.
Hi there. Okay, so we had some problems. Apologies. It's good that I checked. That's quite funny, actually. Right, sorry, James. If you're watching, apologies. I've just completely trashed your live stream setup for Sunday, so I do apologize. I didn't check what we were doing. Right, so we're going to start all over again. Let me just share the screen. What a disaster. Right, sorry. Thank you for everyone to join us. Sorry for any confusion about that. That's totally my fault. We schedule a lot of live streams in StreamYard, and if you click on the wrong one, then you mess with everyone's mojo, which I've just done with James's. So I apologize for that, James. Sincerely, that's my bad. Right, so hey, let's start again. Welcome to everyone for joining us. I'm sorry if you've jumped on the wrong live stream. That was completely my fault. I'm just checking YouTube. Everything's working okay. It seems like it's going to be one of those days. There we go. That's fine. So I need to, James, I'm sorry, I need to reschedule your live stream for you or whatever. So apologies for that. Completely messing up James's mojo, so I'm sorry for that. Right, so thank you for joining us, especially for those of you who just jumped on the wrong stream. That was totally my fault. Hello, Dana. Hi, Lola. Thanks for being here. If you managed to find me, a bit of confusion today. So, right, FOMC. Let's jump into that. So, what I was saying before I screwed things up, when we have FOMC and we're approaching it, and everybody kind of really knows essentially what it's going to be like, then everything is baked in, right? The price is baked in. Like any run up before FOMC is baked in. So we don't tend to get much reaction. I know the other markets have reacted a little bit more positively, but with crypto, it's kind of that deal. And we know what's coming, and it's just a case of, is it going to be 10% hawkish or 20% hawkish? So we pretty much got what we expected. We've got the interest rate cut and the usual ambiguity about what's happening next year. But that ambiguity with FOMC, of course, is not particularly to do with, are we going to get 1 or 2 rate cuts or whatever? It's more about who's going to be in the big chair and who's going to be making those decisions. And, that again is a level of uncertainty, but we have some, because it's a very challenging environment at the moment with the interest rate cuts, because we are struggling with employment data coming out, and we're struggling with, the Americans have been struggling as well with the lack of certain data points, and it's been very confusing. So I don't think we could have expected anything other than a subtly hawkish tone yesterday, just very subtly, and subtly to the point where some commentators are interpreting it as dovish and otherwise. So we've got a lot, but I think we have probably, in terms of interest rate cuts, probably more to come next year, certainly with the change of the guard. But the question is that going to be helpful or not? Because obviously, you can say it's good for risk assets, you can say all of that, and it's good for lending or whatever. But the reality is that, in terms of dealing with inflation versus in dealing with the employment issues, potentially, which are bubbling in America, and of course it's just one country, but it's a very powerful and very influential country, and therefore there's a lot of uncertainty still about what is to come. But the point is, I don't think we've seen much. We haven't seen, certainly from Bitcoin, haven't seen anything crazy, any kind of moves or anything, not the kind of whipsaw action we usually expect. And I think that's because everything was baked in and everything was kind of as we expected, which is good because we like stability. Now the question is, as I was saying before I screwed everything up with the stream, the question is, are we going to have continued upwards momentum for Bitcoin, or are we going to falter? Now, let's have a look. Let's just jump in. I put a poll in our private group earlier today asking this very straightforward question. I'll let you absorb this chart for a moment. And the question is, are we going to have a higher high next for Bitcoin? Are we going to have a lower high? Or are we going to have a lower low, which is the bearish scenario? So what do you think? Now, if we look at it from a purely TA point of view, a higher high is what we need, and we need a higher high above 96K. Why is that important? This higher high here technically maintains the trend, but it's only just eking out compared to the previous one. Now, in order for bulls to start looking at Bitcoin as something where, oh, I need to get in now, oh, I need to jump back into Bitcoin, all right, the bottom's in, we need to see the bulls attack the resistance, right? We need to see them to attack the short sellers, right? And that means we need to break above 96k, because this is essentially where the battle lines are. And if we don't ever get up there, we're just staring at the opposition and not doing anything, right? We're staring at the bears and just saying, okay, you hold your line. We need them to step back. We need them to start reconsidering their positions. And we need bulls to start thinking about, well, I'm going to wait and see, or I'm going to wait for 82 to 81k, or some will be waiting for 75 to 73 to even 69k. And in order to change that narrative, which essentially is going to act as gravity of sorts down to these lower price levels like this, we need to see something different from Bitcoin. And it's great that we've been relatively stable, but we need to have a higher high above, the 96k, beyond the short selling lines, essentially, and start attacking these ranges. And if bulls see that, then what we're going to have is people are going to be like, okay, you know what? I don't think we're going to hit 75 to 73k now. I think more likely, this is the safest play. This is for a long-term position. I'm going to wait for this. And then if Bitcoin then puts in another higher high up here, then they'll start reconsidering their position and thinking, oh, right, you know what? 89k here with 3-day 200 MA confluence, that makes sense, because 89k is significant on the higher time frames, and therefore they start moving up their positions. The bullish order blocks start moving up, and start saturating a little bit more in this area. Let's just put the order blocks on just to see what's going down. Right, yeah. So this is the deal, right? So these will start moving up, and even though this one is bright green, we really want these to be bright green. So if we do get a higher high here, we'll start seeing that the saturation of these order blocks, just on a very basic level, is getting a bit brighter. We're having more people looking to come in here, right? And that's what we want. And then we want the sellers to start reconsidering their positions up here and so forth. And then we can have some upwards momentum. But right now, when the sellers are just holding the line, and they're not flinching, they're not moving, they're staring the bulls down, and the bulls are just like having a little dance in front of them, right? Ultimately, when we see these technical higher highs and these technical higher lows, it's not really inspiring me to think that Bitcoin's going to go up like a rocket or it's going to recover, especially considering all of the bearish signals we've had over the last few months. So we're doing fine. We're holding the 3-day 200 MA. We're holding 89k, which is good. That is what we want, but we need to move up from here, because if we don't, where are we going? Well, if we see a lower high, as an example, that was the poll in the group today, right? That means most likely the bulls are going to start being hesitant again, and then we'll start ending up coming down here. We'll have a lower low, and then the process will reset, and all of this hard work will be done. And I mean, on higher time frames, that's perfectly normal. We need to have a reversal pattern formed, essentially, so like a double bottom like this on the higher time frames before going up, and that's fine. There's no big deal. But the problem is these key levels, which we're sitting above at the moment, are so important on the higher time frames. We can't afford further dips down here, because it's just going to reinforce the bearish narrative when we really want to be rubber stamping Bitcoin's progression. And I was talking about this the other day in Bitcoin Update, and ultimately we'll come back to that in a minute. It's a nice looking chart. We'll come back to that in a second. If the bulls, and it makes sense for the bulls to be, this is a weird take on the head and shoulders pattern, which I've been looking at, so don't take too much into this. It's just a work in progress. But if we do get a move up to 106k, which is typical just for a bearish retest, we're still really bearish, right? That is just a bearish retest, right? But we want to get up there, because then we get to have a fight with the bears, right? And if the market conditions are improving for whatever reason around the world when that occurs, then bulls might be in a chance to change the narrative and then get back up here and continue on its way. So there's always opportunities, but until we get up there, we can't have that battle. And if you look at this in terms of, well, we've come back down to support, we've had a bounce, it's pretty meager, right? It's pretty meager. But if you also look here, what was happening back in March, looking back in March 2025, there we go. We had this very meager bounce, right? Very similar, right? And then we came back down, dipped lower, right? There's 74k, 75k, and then continued on our way. So of course, all of these patterns take time to play out, and this is the weekly, so it's significant, right? And Bitcoin just be made doing this for the next up until January or February, and then maybe we have a crack at 106k and then continue down from there. Or, as I said, win this battle, because then next year, if the macroeconomic conditions are improved, then maybe we have a chance of going up from here. But as traders, we can't presume we're going to break 106k and continue on our way, because we're getting all of these bearish signals. We've lost this. We've lost 106k. This is a typical bearish retest before we continue down. And until we see something different, we have to presume the bearish narrative. Why it's super important for Bitcoin to give us these little signals now for the bulls to start coming into the market and help essentially break through these resistance areas, at least so we can have some bullish momentum coming into the end of the year, into the new year. Otherwise, we don't even, we're just coming down, right? We're coming down to 74, to 75, 73k, and that's it. And this is why these three tiny little macro levels on the intermediate trend, represented by the 4-hour chart, right? The weekly, of course, represents the primary trend. And this is why these are so important right now. And this is how it affects our trading. So if we see a higher high, you're going to see the altcoin market also start to move with a bit of fervor, because we've had confirmation. Right now, the altcoins have started to just enter a holding pattern, ultimately, because they're waiting for what these next three signals, right? Which is it going to be? And of course, this is the one they want, right? And this is why the last couple of days we did have some movement from the altcoins, which was pretty good, pretty okay, because we had a bullish move. We put in a higher high, but then it fizzled out a little bit following FOMC, and we need to re-get that momentum, right? So it's good that we're holding this level, but it's what happens next which is important. So let us know in the comments: higher high, lower high, or lower low. What do you think? Traders, right? And I keep saying that as traders, this is how we know what our position size should be for altcoin longs, or if we're switching to a short, or this tells us whether we need to wait or whether we can start looking to enter positions. So these are the signals we need, right, in order to access, trading the crypto market in general, because it dictates lower low. Okay, Roland, lower low. All right, that's I honestly kind of, well, I mean, if we can have a lower high then a lower low. I should have done that as a fourth option, but I'm kind of with you, I think, Roland, to be honest. But nonetheless, we have a definitive line in the sand, which is great, because of course we're not going to get that lower low unless we break 89k. So, but this is it. This is the game of trading, right? We need to look at the signals, assess the impact for market weather, and then trade that. But that's Bitcoin. Let's just check in with some comments, because that was a lot. Let me just take a sip. Oh, Lola, you're a lower high. Okay. Lower high, so a lower high first, which kind of makes sense. Okay, so we go to here first and then we drop down. That makes sense. Obviously, Roland and me thinking that we're going to go to a lower low means that we pretty much just invalidate this higher low and go straight there. So it's going to be very interesting to see that. But yeah, let's just see what happens. Right, let's have a look. Let's just go through the comments. Morning, Lucky. Thank you so much for being here. Vishez, have I got that right? Yes, big hello to James and Emily and everyone on the team. Yeah, everyone's good, I think. Spoke to them earlier today. Good morning, Sean, as well. Thanks for joining us. And Lind. Sorry if I got that wrong, from Facebook. When it comes to knowing and understanding the crypto market, trust Samuel Nate Molello. Okay, let's have a look at that. Let me make a note of that. Thanks for the tip. Presuming that's a legitimate tip. But thanks for joining us on Facebook. Yeah, let's have a look. Yeah, there's lots of good people. Not typically the ones which are shouting a lot, which can offer a lot of insights, but I'll check that out. That'd be cool. Thanks. And what else we got? Yeah, so the lower lows. Okay, so what we look at today. Now, you probably noticed a big rainbow, a big rainbow wave. And I just want to talk about this very briefly. So we've been talking about in Bitcoin updates, which is fast becoming a regular series. Netflix, are you watching? I'm just joking, but the argument is that what we've seen this year is very different to what we've seen previously. Now, on the bullish side, we've had quite a long bull run. Not necessarily, we've had quite a long bull run. It's been we've had a lot of bullish momentum for quite a long time, but it hasn't been like straight up like it was in the 2015 to 2017 cycle, or in 2021 to 2020 to 2021. It's just been kind of like, we're heading up, we're going. And it kind of makes sense if you think of Bitcoin size, right? Back down here in 2015, it was a speedboat. Now Bitcoin is an oil tanker, right? Because it's so big, it's over $1 trillion in market cap. And therefore, it's the presumption, of course, that we're going to continue to go up with the same fervor we did when, Bitcoin was just a few cents, it's probably, you know, institutional adoption, of course, helps that, bringing that new money in. But I'm not sure, you know, it's Bitcoin's ever going to be as nimble as it was, because of course it's the law of diminishing returns. So there's a few factors here, but I think this wave cycle really highlights the fact that this bull run has been quite muted, and due obviously, I think, to macroeconomic factors. We've been talking the trade war and all of these things, and I don't want to get too much into this, but of course there is a narrative going around at the moment, which I think is legitimate, which is the idea that, and this is not a political statement, we're just trying to talk about facts, but excuse me, the Trump administration has in the United States, and of course this is just one, you know, one part of the world for sure, but all eyes are, of course, have been on this, you know, with a lot of the crypto legislation, which has been essentially repairing the lock as opposed to opening the door fully for crypto. But it's been pretty bullish, lot of sentiment. But then the reality, and we had a lot of good bullish movement after the election in November 2024. But the reality is, because of the trade war, because of all of the uncertainty in that area, then I would say it hasn't been good for crypto. It hasn't been good for crypto. Now, will it be good for crypto in the coming years due to better regulation and improved onboarding and tax regulation? Maybe, right? But it's about, like, what master does the legislation serve? Does it serve everyday people, which is essentially what crypto, certainly Bitcoin, or is it going to just be another way of you know, the top 1% making their money? And that's the question. Now, I'm not just talking about the US, we're talking about the UK as well, and all the legislation and how it impacts things, and taxation, and, you know, it's very complicated at the moment. But the reality is that it would seem that you can't really have your cake and eat it. You can't try and change the global order of economics. I'm not questioning whether that should be the case or not, but you can't do that and have your cake and eat it, and then have a flourishing crypto market. Because of course, outside of Bitcoin as a store of value, the altcoin market is extremely susceptible to macroeconomic headwinds, and Bitcoin itself seems to have. Because if you imagine Bitcoin's on its way, right, it's going right, let's go, and then we get some bad news about China tariffs, and then everyone pauses for a few months to try and let the dust settle and see where we are before they take positions. And they're like, okay, we've had a few months away from the tariffs, and they jump in their positions again, strategy buy some more or whatever, and then we head our way up. But then a few weeks later, there's some more bad news, right? Or there's, you know, and then you know, the war has been very prevalent this year as well, and then it's just start, and we can never get going. And all these run-ups and then pauses arguably should have been a lot bigger, right? And we should be up here at this red line, this orange line, but we haven't been. And I think looking at this chart, coming around to around 55k, 49k, this sort of area seems to be on the cards at the moment. Now, that doesn't mean that we can't, you know, completely just mess this pattern up. We can. You see here, right, back in February 29, right, this is a bit of an anomaly, right, where we do have a little mini bull run here. So we could have a little recovery from this point, and it could spike up here. That's well within possibilities. I mean, we could still come up to this line here, and that's 210k, and that's just January 2026, right? We just look at this curve. So there's still options for Bitcoin, but this kind of highlights the problems we've had this year. And do we, you know, break these cycles? I don't think so. I think the reality is we are going to be coming down ultimately. We may have a bit of a dance for sure, but until we see something different, this pattern, I think, really underscores the bearish narrative for the next few months. Now, I don't think a move down to 55k is that bearish. Actually, I don't think it's terribly bearish. I think 5k is bearish, as we were talking about in Bitcoin Update this week. But this, I just want to show you this because it really does highlight kind of the issues which we've had this year, but also the potential possibilities, right? Because we don't want to get too stuck to all of these patterns, but they do play out quite well ultimately. But that's that. And just to give you a little bit more of a upbeat view, there's a question about altcoins, thoughts on altcoins. So let's get to this. Let me just put that comment up so we can all see it, and I'll have a drink of coffee. Thank you, Lucky, for that. So the altcoin and the whole altcoin situation is very interesting because, you know, there is this. If you look at this chart here, this is just a visual, right? There is a bit of TA on here to highlight and support the idea. But, you know, we had altcoin season 1, we had altcoin season 2. Now, I was trading this, made a load of money. It was really great. A lot of people made a load of money. It was really great, really fast, super duper, loved it, brilliant, very happy time. But we've had such an extended downtrend, markdown period for the altcoins, and we are in the area where we should be we should be, you know, coming up right now. Why does it have to come up? It doesn't have to come up, but we mustn't lose sight of the basics of the market cycle dynamic, right? Which is essentially, you know, consolidation. Yeah, people start entering their positions. We get this curve round, and then we come up. Here we go, and then you got the curve, and then distribution, and then markdown. Right now, how long markdown is will, of course, depend on like economic factors, all of this sort of stuff, regulation, and you can see that you can understand why this has been an extended markdown phase compared to previous ones, as this really should have, the altcoin season should have been done and over with by now, right? It should have started at the end of 2024 based on historical cycles and ending about now, right? Peaking around now maybe, or last gas around now, but it hasn't. And this shows it's been a very difficult year. So what does that mean for next year, which is typically a bear year, right? Do altcoins just continue to head down from here? Well, I mean, there is another line here for sure. We could continue to go lower. That's a possibility for sure. We can't discount that. But you can see how the October crash really defined this line as support, right? There's a reason why it stopped there in October. And if we do come into this pattern now and bounce and find another floor, then, you know, this could be tremendous. And if Bitcoin isn't too bearish and Bitcoin just has a period of just a little bit of markdown and consolidation, then that's actually enough for the altcoins to go, because you've got to look at it like this. People have been trading Bitcoin. Everything's been about Bitcoin, about the ETFs and everything, right? But now people are turning to XRP, people are turning to Solana in terms of tradable assets on the blockchain, stock assets on the blockchain. And the use case for a lot of the top 10 to 20 cryptos, right, some of them now, is becoming pretty significant in terms of they seem like they can pretty much stand up. You know what? I can stand on my own 2 feet now. I don't need you. And also, when people take profits from Bitcoin, right, which they will be doing, right, have been doing, where do they put them? What do they do with them? Right? Well, they're going to look for other assets. They're going to start putting them into the Ethereum, the top 10, the top 20. And then if we have sustained calm in the markets, in the world markets, and then that money flow will continue, and then people will take profits from that move up from the top 10 and 20, and then the money will trickle down to the mid caps and the low caps, and everything's blowing off. Just look. So this is the idea, and there is still a narrative where the altcoins can have their season, whilst Bitcoin also has a retrace and just consolidates for a couple of quarters, 2 or 3 quarters. That is a possibility, right? We can do that, and that might be the natural decoupling from the rest of the crypto market from Bitcoin, because Bitcoin, you know, coming from a country with a monarchy, right, and a long history of monarchies, you know, kings never last forever. They never last forever, and Bitcoin, I don't think, will ever go away as the leader of the space, but the leader in terms of the elder statesman, and potentially not, you know, like if you look at King Charles now in the UK, now on the books, technically he can block legislation, but the reality is that he doesn't. And we operate a full parliamentary system, and he's just a figurehead, right? And Bitcoin may become that ultimately. It may become digital gold, a good store of value, whilst Ethereum, Solana, whatever, take over, and altcoins then are able to move without having to worry about what Bitcoin's doing every other minute, which has been the case to date. So that's what we'd be looking out for. And certainly Bitcoin dominance is supportive of that as well. But, you know, this is the conversation at the moment, and we're going to continue to keep you covered with regard to that. Let's have a look at that question just for a moment. Okay, so buy the dip after FOMC or wait for a reversal. You have to pair FOMC or any data point entry. You have to pair it with, I don't know, I've got Bitcoin Cash on there, like super old and crusty crypto. You have to pair, you know, so what I posted in group in ArcisFX's private group yesterday was, this is my plan. I will wait to see what happens with FOMC. I'll wait for the dust to settle till next week, and then I'll assess and look to trade, right? I'm obviously doing TA. We're looking at Bitcoin. We're looking at what we need to see, right? But right now, it is a waiting game. We need to see how because Bitcoin is still trying to figure out how it wants to react to this. Then we can have an assessment on what we do. Are we entering a long? Are we entering a short? Now, I think we're still in the buy the dip. We still have the buy the dip idea for sure, Roland. Yeah, but you're right. We need to wait for a reversal, right? Now, what we're seeing at the moment could still be interpreted as just a bounce before I move lower, right? I could very easily draw parallel lines on each of these and highlight a potential bear pennant or a bear flag or a bear pennant or something like that, right? And then we can continue lower. So the local bearish scenario might be we get that lower low, Roland, as you suggested, or maybe the lower high first, then the lower low. We then come back down to local support, but instead of tapping like 80K, which this wick did here, but instead of doing that, we actually just don't even touch 81K. We touch 82K. We form a reversal pattern like a double bottom on the higher time frames on the back of the fact that we didn't dip lower, and then we move up from there, and then we have a neckline around here to trade off just below resistance or something like that. That's the game. So it's a combination of waiting, be patient, let the market settle for 48 hours, because the reality is that there are trading opportunities always, but we want probabilities in our favor. And if we're jumping in today with a trade when we don't have clarity of a direction, which of course, as I highlighted today, we don't, then you just wait and then make your decisions. As I said, it's a game, right? If we get a higher high, more traders are going to be looking to come in at these lower levels, at these slightly higher levels, than they are at the moment, which still will be, this is kind of the earliest place people will look for a long entry at the moment, because look, we're not seeing a very strong bounce from here. So, wait for the weekend, assess, plan, and then consider your options. But what I would say is this: until we have had any attempt to attack or fight with the sellers at here and try and move up from here, it should be smaller positions, and it should be smaller trades, like range trades. Like, I don't think anyone should be entering right now at 82 to 81K thinking that we're going to go all the way back up to 125, and that's the premise of their trade. I don't think that's going to be it. I think you should be looking at the possibility of potentially coming in at local support and trading the range like this, right? Doing something like that. Let me just put the long position tool on, because ultimately that's all the market is giving us at the moment. The only possibility we have really is that we're going to come back down here and trade this range until we break higher. If we break higher, we reevaluate. So it's always got to be, we've got to react to what the market is giving us, right? Not necessarily, unfortunately, what we want to have happen, because I can very easily see us doing this, right? And coming back down here, right? And then again, entering a long position here, then just doesn't make sense. So we do need to, of course, have confirmation at the moment. It's very important to have confirmation. We need to see, a move, a higher low here. And then we'll have some traders then saying, okay, great, we've bounced here. Super, we haven't dipped as low as we did here. And then I'm going to come in on the break of 86K. Other traders will then look to come in on the retest of 86K. Other people will wait for 89K because they recognize its resistance. And then it just stacks up from there. So it's always about, we have to start off with smaller positions. We have to start off with caution, and we have to start off with where the most buyers are locally first until we see something else. Right now, this is still the area to trade, but even then, coming in here is risky, right, on the back of this. If we had seen this and then a dip down here, it's easier to come in here with a bit of a bigger position, right, because we've broken above resistance. We've shown that the bulls can break through the enemy lines, the bear lines, and I've been watching the American Revolution documentary from Ken Burns, so I've got all of this in my head, so I apologize for all the those kind of warlike references. It was 12 hours, so there's a lot in my head, but that's what we need to see to come in here with any confidence, right? But we haven't seen that yet, so this level still remains shaky, right? And this is the whole thing. So you have to adapt. You have to look at what we're getting and then adapt your position based on that. And it's very complicated. Unfortunately, crypto is very, very complicated, and because there's so many different factors. Let's have a look at this. Here we go. I think as long as gold, silver remain strong, BTC remain pressured. That's a scenario for sure. Yeah, that's potentially the case. Yeah, for sure. We were talking about a couple of weeks ago in Bitcoin update that in order for more of a bullish narrative, of course, for Bitcoin, outside of the US, the dollar pairs, Bitcoin versus USDT as an example, we do need gold to chill out. Right, we need gold to chill out, because then Bitcoin can start essentially outpacing it, even if it's just standing still on that chart, and then that's just a bullish signal people can trade off and so forth. So there's many different things to be considering, but that is certainly one, absolutely. But it highlights how just this chart alone isn't giving us the full picture, right? Nor is a higher time frame chart. We do need to, as James has been very aptly talking about over the last few months, looking at alternative things like the gold versus Bitcoin chart, all these things to get these insights. So, but the most important thing is, whatever you're doing, right, you need to assess what type of play you're going to do and make sure you've got the probabilities in your favor. And if you can't get the probabilities in your favor because you're not getting the signals you need to get those probabilities in your favor, and those probabilities will be determined by how many buyers are going to be with you if you're longing, or how many short sellers are joining you when you're shorting, right? You've got to sort that out. So if we have a lower low now, then we're not going to have a lot of buyers coming at local support compared to the amount which will come in at local support on the back of a higher high, right? And that's the difference. That's the important thing, right? And unfortunately in crypto, it is this frustrating game. It's always a game of, oh, if I get this, this is what I'm going to do. If I see this, this is what I'm going to do. So it can be very frustrating, but it's not overly complicated once you're experienced with it. You just need to, hi MD, good to see you, wondering where you were. Thanks for joining us. Really appreciate you being here. So it's just let us know how you're doing, MD. I haven't seen you in a while. Let us know how's your day going? How's your week going? How's your trading going? So that's the whole situation. Now, anyway, enough of me rabbing on about that. What's next on my list? Right, let's talk about setups just for a minute. So we have this context. Now I have this is Funfair, maybe a altcoin gem tomorrow, but I just wanted to highlight this bear chart, right? To highlight kind of what we're doing. So when we are dealing with uncertain conditions right now with Bitcoin, which has the potential to start attacking sellers and break upwards, right? We also have to be aware that in those sort of conditions, we can't be taking trades where we're out on a limb. Now, what does out on a limb mean, right? Out on a limb means essentially, if you just zoom into this just for a second, right? So we've had a lot of bullish momentum, right? We come all the way up here, and then we look to maybe enter in this zone, right? Way above support, right? In the middle, in no man's land, essentially, on the hopes that we're going to have bullish further, which drives us up. Bitcoin is not supportive of that right now. It's not. So we can't take those sorts of plays because we enter here, we're essentially entering potentially what could be distribution, and then we come all the way back down, and then we're struggling to manage our trade, and that's it. And we don't have the probabilities in our favor as a result because we just don't have the bullish signals. So what are the plays we should be taking? Well, the plays I am taking at the moment are hard long-term support buys because they are manageable and they will always have buyers there regardless of the market conditions, right? Now, the bounce won't necessarily be strong, but this is how we need to adapt as crypto traders. Uncertain Bitcoin, hard support, right? Find a token which has got hard support like this. Let's just a little bit of charting and see what the opportunity is here. So let's just have a little bit of a dip because there's always buyers there. And there'll always be people with these tokens not wanting to enter negative price discovery as well, regardless of the conditions in the market. Which means essentially, even if things do go bad and Bitcoin does start heading down, which of course puts pressure on, say, this asset Funfair at the moment, you still have people, the project trying to recover the asset's price below negative price discovery, and you also have buyers coming in at hard support, right? So let's just double check that area. There we go. So we haven't tapped this yet. Right, so here's an opportunity. Let's just draw a line on here, right? And this is very relevant, right? It's because you don't have to stop trading when the market is hesitant. You just have to choose different plays, right? Ones which you can manage, right? That's the key thing. Manage. You're going to be able to manage it. So let's have a look. We launched off here in March 2025. We came all the way up here, which is tremendous gains, I think. Let's have a look. 1,000% or so, right? And now we're all the way back down here. So there is an opportunity, but this meager bounce is the warning sign, right? Because look, all of this this is the October crash. We haven't recovered from that. We've come all the way back down and now we're here. So what that does give us, of course, is a trading opportunity potentially at support. But also we have, other things we can look at. So long term, you can say to yourself, right, regardless of what the market is doing, I know that 0.00108 for Funfair is going to have a little bit of a bounce because we haven't tapped it since March 2020, which was the pandemic crash, right? Therefore, there's going to be buyers there, which means most likely, if I come into this area, I'm going to have a nice 97% bounce, even if it's just meager because it's obviously not a high cap, right? So that's the idea. So we have that play. So if any of you are looking for midterm holds or these long-term, these medium-term sort of bounces, right? This is the sort of play you want to be looking for. Don't put yourself overextended. And then if you are looking for some maybe short-term plays, then of course you start to look at what the current price action is giving us, and then we'll zoom in. So for long-term holders or people who really want to mitigate risk, you're coming in at hard support here, right? And you maybe just trade this range. That's it. You benefit from all the buyers coming in because it hasn't been there since March 2020, and then you trade the range and you get out, presuming it's going to head lower. But we do have an opportunity again for a slightly shorter term, right? Because of course, when we are this low to support, we are going to, of course, have I can't find my tools. I'm being a bit silly today. We're going to, of course, have a lot of buying interest as we approach it. So what we got a double bottom, right? We know we're very close to all-time support, right? Like catastrophic support, all-time support sort of thing. So here we go. So we have that is a lower low, so that's a warning sign, but we have broken above this range. So if that was it's a bit janky, but we have broken up above there, so that's fine. Now we're coming back down, and you can start to see the curve, right? You can start to see the curve, right? Potentially. So if Bitcoin does come up from here, there is an opportunity. So let's have a look at this. Let's try and draw in this pattern here and just get a sense of what works. Now, once I finish drawing this, it may not be a viable trade, but let's have a look. So here we go. Okay, so we've got a descending, falling wedge of sorts, right? Now, obviously, just ignore that. That's just to illustrate something. And let's have a look at kind of what the resistance lines are overhead. And here we go. Let's just double check that. Yeah, okay. Maybe, I think that's better. There we go. Okay, so just get a lay of the land, the sort of range we're trading in, right? And let's just try and see if there's anything else we can look at. Let's just look at where the moving averages are. Have a quick look, right? Okay, I kind of like that. Why do I like that, you ask? Because crunching up, and we talk about lining all your sellers up, take them out in one shot. Well, this is what we can do with this, but let's just calm that down a bit. Let's just leave the 200 on, right? And there we go. Look at that. Nice confluence, right? I'm feeling the probabilities, right? So let's have a look. When was the last time we broke above the 200 MA? Obviously just there. So we've had the first kind of shot above the 200 MA. Really haven't managed to get above it. But you can see what sort of happens, right? When that goes. So, okay, so we've got a narrative, right? Very straightforward. This is how you should be doing it, right? Okay. So still, I'm going to put an alert on here. I'm going to have a long-term play ready a little bit in my bag to load up here just to benefit from a move down here. But that may not happen, right? We have a higher high. After a tremendously strong high in the context, we have some volume. As you'll notice, we didn't really surpass that volume. So it's kind of par for the course, right? These moves, it's obviously not high cap, so it can move. So don't look at this and be like, oh my God, this is going to the moon. This is pretty normal, standard tepid sort of mood for this token. So let's have a look at what the potential play might be, right? And we'll go with so let's see. I want to break above the 200 MA. So presuming we just hang around here for a bit, that's probably going to be around there. And because we are in a very strong downtrend and we are very close to long-term support, I ain't hanging around. I'm not presuming we're going to come up here, right? I'm looking for a trade around here. So maybe stop loss below there. Here we go. So there we go. Okay, something like that. We're looking for that. And then you will simply then wait for confirmation, not just of this pattern, because this on these low caps or medium caps or whatever, they're not, they don't have much meaning, but because we've got the 200 MA on the forum, it is significant. So let's just say, so we see a breakout of the 200 MA, ideally into this upper range, right? So giving us a clear kind of signal that this is done, and then we look to come in, right, around here, right, in this sort of area. That's what we're sort of looking for, right? And there's many options, of course, but you can say to yourself, depending on the market, right, you can say, okay, I'm going to come in flush in this little pocket here, right, and maybe move your entrance down and just trade that range, right, and just get as low a possible price as you can. So, but we're waiting for a break of this wedge. We're waiting for a break of the 200 MA, and then we're looking to come in on the flip side if we get a nice, strong move. Now, what does that give us? It gives us some attention from some people, which are then going to also try and do the same thing, which increases the probabilities of a potential move back up to here or even higher up, right? But we're not waiting for that. This is the game when you're doing setups and you're trying to trade them. It's all about kind of getting those probabilities in your favor. And you have to assess the fact that this is we've had a very steep downtrend. This most likely will come back down here if we don't get a breakout. So we're not going to come in here. We're not going to front run this. We're not going to come in where we are now. We need to wait for a bullish signal with confluence, break of the 200 MA, then we come in, right? And then we look to come back in around here, right? That's the sort of thing. Now, this is still a risky setup, so it will still be a lower position, of course, because it's a low cap. But nonetheless, that's the sort of thing you should be looking for, right? Waiting, assessing a trade, looking for what it's going to be. Okay, we've got a double bottom. It's a little bit janky, right? It's a bit worrisome. We've had this move. It's a low cap, so this is nothing to really write home about. But I can maybe still trade this range if Bitcoin gives us that here. And here's the key thing: if Bitcoin gives us that higher high, then maybe I'm going to have the confidence to come in here. So what I will say to myself is, this is a risky setup, right? It's a risky setup. You can see the price action is starting to reverse because we're at long-term support, right? And again, we may not get a tap down here, but I'm still going to set an alert. So you know buyers are starting to come in, right? Because we're approaching long-term support, right? But I need to see Bitcoin, what Bitcoin's going to do. And if Bitcoin then gives us that higher high, or gives us some kind of attacking these upper areas, then I'll say, okay, if I get a higher high from Bitcoin, I will then look to come in on the retrace for funfair. And then I've got the signal from Bitcoin, and I've got a little bit more probability is that we're going to have more bullish buyers coming in for Bitcoin. And then, of course, we look to enter that setup. Those combination of things are what I want to see. And if I don't see all of those things, I'm not entering, right? And this is how you need to trade in these very challenging market conditions, right? You need to set yourself a criteria, put it on a Post-it note, and then follow it to the letter. And you should be aiming not to enter a trade until all those check boxes has been ticked, because there is a time for being like, ooh, ADA's broken out, I'm jumping in with 10k, 50k, right? There's a time for that. This is not it. This is not it. Not with Bitcoin the way it is, right? Not with potentially entering a bear market. So we have to be very cautious. But there is the possibility that all of these altcoins are going to start reversing, and we can't ignore the fact that a lot of these assets are entering long-term support, and the upside potential is massive if the money starts trickling into them. So we don't want to be shy away from them, but we just need to bear in mind, right? Okay, smaller position sizes are going to have very clear confirmation, because then other buyers will see that confirmation and they'll look to trade it, right? So that's the idea. So I wanted to show you that. I didn't want to just bore you by showing you me doing a setup, but this is how you need to approach crypto trading, right? Or volatile assets in general. In fact, you have to approach it like this. You can't be just, somebody said to buy this, it's a good asset. No, or you can't just glance at funfair and be from the daily chart and be like, oh, it's pretty close to support, I'm going to buy, because the reality is that, this from here to here, that's like 60%, right? You can't play that game. You just can't play that game. So, and you can see what this can do, right? It's all this is fantastic, right? And we could have another move like this. When was the last time we had a big pump like this? It was June. Then before that, it was April, but Bitcoin was a lot more bullish then, right? So we could see something like this. I think we could see a recovery blast of some kind, right? Certainly when we hit here, but we have to be very cautious entering. And of course, this would be a low position anyway. So, right, MD, I'm so sorry. Link and Sol. Let's have a look at that before we finish. Link and Sol. Lincoln Sol. Ah, here's Link. Is Lincoln Park? I was thinking of a band. Lincoln Sol, Lincoln Park. Link. Right. Okay. So Chainlink was a hero token for altcoin gems a couple of weeks ago, and we're holding pretty steady at the moment. So we've essentially got a range by those. We had this to the bottom. The idea was that we come in at this X potentially with our first position, and then this X with a second. Now that's kind of been invalidated now, because we've moved way past this pattern, and we can obviously come back down to retest support here, but we don't have the confluence of this nice little pocket anymore. So that's the context. Now this doesn't mean that this lower support line isn't a good entrance point, but we don't have confluence. So you need to have some of the confluence. What does that look like? Well, if you haven't got pattern confluence, you can look for RSI confluence. And then what that would be would maybe oversold conditions on a couple of time frames as we approach this area, right? And then you can add stock as your confirmation as well. So right now the stock is oversold, but we don't have it on the RSI. So you could say to yourself, okay, so if Link comes down to $12.5, in order for me to enter, because I don't have pattern confluence anymore, I need to see oversold conditions on the 4-hour and oversold on the stock, something like that, right? And just, you're always going to have a couple of things to keep the probabilities, because buyers search for assets which have got oversold conditions on the RSI, as an example, on varying time frames, and it pretty much starts on the 4-hour. So you'll have people finding, obviously Link is a top tier crypto, right? But just in generally speaking, you'll find people which have alerts and RSI Hunter and all this kind of stuff, which will tell you when assets are oversold. It brings them to the token, right? So that's an added probabilities that you're going to have more buyers coming in. So that's why you want some sort of confluence. Now, it doesn't have to be the RSI. It could be a moving average, right? It could be an order block, right? It could be, but the more the confluence you have, the more probabilities it is. So don't just be like, well, this is the next line down, I'm going to enter here. Don't do that. Don't do that. We need more. You need much more, right? And the stock RSI by itself isn't enough, but the stock RSI with oversold conditions and the regular RSI on a couple of time frames, then this becomes a bit of a tasty entrance, right? So Link at the moment is trading a range, right? So you could trade this range, very straightforward, right? But again, what I would like to see is some confluence. There's no pattern on the RSI I can see which we can trade off. So I don't think it's a good play to come in here right now. So it might be an idea of waiting for this lower support area and then looking at the multi-time frames and just checking that we've got something, right? Some extra confluence with the RSI or something to come in on. And let's just look at the moving averages, see what we got. See, that's a little bit problematic, right? Because the issue is that I think some of you can probably see the problem that we are stuck below, in between all of these moving averages, which means that there's a lot of ambiguity here, and the chances of us coming up and down is a bit of a coin toss right now, and it's going to be very dependent on Bitcoin, right? So this right now, you could probably change this range, but I would like to see additional confluence, and I just don't have it, right? So additional confluence might be a pattern on the RSI, which you can trade off. We just don't have that. We just don't have. For example, look. So if we had this line here, and at this point here, the RSI was resting on this lower diagonal support, then you've got an idea potentially to move upwards from the price action on the RSI. But you can see the RSI is broken down, which is essentially implying what's going to come next with the price action. So the next line in the sand I would recommend for Link until we have a break higher, right? And of course, if we get a break higher, as we just talked about with Bitcoin, that changes the game and we can start to reevaluate what our entrances are. But until we see a move higher, you have to presume now we're coming back down to this area, which would be this play. But then you also need to say, what do I need to see? Right? I need to see oversold conditions, whatever, blah, 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 right? Or maybe look at, whatever. It's up to you, right? Divergence, maybe. I mean, when you arrive at that point, divergence is excellent for peppering confluence, right? We have a bit of divergence mitigating that is just canceling that out essentially. So lots of different things you need to look at. But if you're entering a trade based on one idea, don't enter. It's as simple as that, right? But Link, opportunities, it's holding its own, which shows it's got a bit of bullish momentum. Of course it does, because it's a very popular crypto, but just be very mindful here at the moment. There's a little bit of divergence, but I'd recommend just waiting to see which direction we go in, as we might come back down here. And then you can look to just scoop up some positions here, but just be very, very mindful, of course. And again, look, there's a reason why we spend so much time charting, because this line here in the RSI, it tells me a lot, right? This break lower tells me a lot about what's potentially going to next happen, right? And even if it does go up from here, this signal is not something I'm willing to trade against, right? And therefore, this is how you need to approach it. Right, Sol. Let's have a look at Sol. Right, now Sol is in a good position, right? Sol is doing fine, right? And it's in a holding pattern. At the moment, it hasn't done much. We've got all these different entrance points, but the big picture for Sol, I think, as MD, I'm sure you know, as we were looking at that, was it last week we were looking at it? Yeah, this was the hero token for altcoin gems last week, and we're at this long-term support. So it's just trying to find an entrance, really. And the reality is that, this is the best place to come in on. Hey Vesh, great to see you. Is this area here, which is around 120, between about 125 and $122 at the moment, given the current market conditions, is really where you want to be, right? Around here, right? Just you get the probability, because then you've got that confluence we were talking about. We've got long-term support, because that can act as confluence, because not all trend lines are created equal, right? So we've got long-term support, right? In a very long-term pattern, right? It doesn't mean it won't break. We have a potential double bottom, maybe a triple bottom is going to be forming. So coming in here, that's pretty safe. That's pretty okay. It's manageable, right? Because if we get a break of this line, it's the first time in years potentially, and then you're going to have a lot of action around here, which will allow you to get out. So for me right now, there's two plays with Sol. You wait for a move above and then reevaluate your entrance. And if you do see a move above, you might feel like, well, okay, if it's really bullish, which the market probably won't be with Bitcoin, you'll come in at you'll come in just for the retest like this. But the reality would be, in the current market conditions, you'll see a break and you'll probably say, well, now I've got the break, I'm not going to come in here at 122. I'm going to come in here at 130, right? Because it's a little bit more bullish now. We've potentially had that curving round again, and the confirmation that we're moving into a different trend, from a downtrend to an uptrend. And then you get to adjust your entrance. So that's the whole thing, right? So today, right here and now, the best entrance for Sol, in terms of probabilities, is 122, 123. But if we get a break upwards, that will change, and therefore you have to adapt. So, but Sol's in a much better position for sure. Sol, lots of opportunities. So pick your level essentially based on your trading style. But yeah, lots of opportunities for Sol. So that's looking good. MD, I hope that helped. Here's a question. Okay, is there a bear flag visible to you on Bitcoin since November till now? Let's have a look. And for that, let's have a blank chart. Love this. I get a lot of trading ideas from you guys. Things I don't see, which is why it's so important in a community. So what time frame are we talking about? Any particular time frame? Let's just, yeah. Oh yeah, you can see it straight away, can't you? There it is. It's just there it is. It's very clear. I mean, I said this at the start, didn't I? I said just put a couple of parallel lines and you got a pennant or something. So yeah, for sure. Yeah, absolutely. Always, a little bit janky there, something like that. Yeah. For sure. Yeah, there's a bear flag, right? And let's just zoom out a little bit. Yeah, it's a bear flag. Yeah, and this is what we mentioned at the start. So, yeah, you have to, this is why you need to zoom out and pay attention, because that's just a bear flag, right? But again, if Bitcoin breaks above 96 to the upside of this flag, then the game changes, right? And this is the whole thing. That's why we have our lines drawn in the sand, because it gives us an idea of what to expect. So you're going to say to yourself, okay, I'm crying myself to sleep every night because Bitcoin's in a bear flag until it breaks above 96. Then I'm going to start crying, right? And that's the way it goes. And then when Bitcoin essentially then starts making moves up here, you're like, okay, well, I'm not crying anymore, and I'm also going to start celebrating, right? Potentially. And then when we get to 106K, right, and then we break above that, then you start inviting your friends around for a party. So this is the way we need to approach trading. So yeah, good catch. Thank you so much for that. Stop spamming caps. Stop. Huh? Don't worry about caps. It's fine. If everyone wants to shout in the comments, that's okay. Exactly this. Thank you, Paul. No, you're very welcome. You wanted that? What is all in the night? But okay. Right. Hi, Ston. Bye, Ston. Thanks for joining us. Okay, right. Last takers before we finish, and I'll just choose one thing to talk about. Right. Yeah. Let me talk about this. I just want to say this one thing. So, in our private group, in the ArcisFX private group, which is a wonderful community which James has built and the team has built, the community members have built, right? There's a few questions which have been asked privately about this. So say, for example, every week I'll post 5 altcoin gems will be made up of 5 setups. Okay. Now the question is, and I post much more in the private group, of course, right? Like the one we're just looking at, the fair one or whatever, right? So we'll post all these setups with it, Sol, Link, or whatever, right? Now the question is, how many of those setups play out at any given time? And the answer to that question, if the theme of today is all about context and the market weather, if the market is super bullish and Bitcoin is in a strong uptrend and it's breaking through key levels and everyone's like, yay, Bitcoin's going to the moon, 4 out of 5, 5 out of 5 of those long setups will play out. Okay. And if Bitcoin is where it is at the moment, right, with a lot of hesitation, a lot of fear, potentially knocking on the door of a bear market, then the ratio will be 2 out of 5, potentially. Okay. Which is why you'll find if the more the bearish conditions get, the more short setups I'll include. So we can kind of adapt that ratio. So as an example, the last couple of weeks I've been trying to include a short setup, and I've got a short setup, I think, scheduled for TRX, I think it is Tron, for tomorrow for altcoin gems. And as the market turns bearish, most altcoin gem videos will then have a 50-50 split between long and short. And then as the bear market continues, that ratio may be, 4 out of 5 will be shorts, right? Because we have to adapt to the market to keep that success rate going. But the reality is that, at the moment, we always have some of the altcoin gems doing really well, right? And you have to pick them properly. But majority of them are invalidating. They're just waiting for Bitcoin, right? But that won't last for long. So there was an interesting question which people asked, because some people, you'll post all these setups. You'll post like, here's Link, here's Sol, here's ADA, here's Doge, and they'll be like, great, 4 or 5 trading setups, go. I'm like, well, which one do I choose? Which one's going to go? Which one's not going to go? Well, again, the answer to that question often doesn't lie within the specifics of the setup or the probabilities behind it. It lies within the market conditions. And you'll find that if you have hesitant market conditions, and then you've got one of the 5 setups, which is like a complete no-brainer, like it's like everyone's going to enter that because it's just so good, right? Because it's like it's like ZEC or something, or Zcash, which everyone wants to get in on, right? Or what used to be Render was like this, and FET was like this as well, where it just every dip was a buying opportunity. Then one will go, right, based on that. But because there's people want to trade things, so always something's going to move. But the reality is that you have to appreciate that when the market conditions are like this, the success or the fact that setups will not move with the same fervor as they do in different market conditions, and therefore you have to adjust. Which is why a lot of the setups you'll find I've been posting since I've really been with Arcis, the take profit price points are essentially the first TP, right? The next kind of the first obvious place to take profits. Whereas in a full-on bull market, like we were maybe certainly at the end of 2024, then we're setting price targets, the TP3, TP4, because it's midterm hold season, everything's going right. So in crypto, there's always trading opportunities. And we talked about buying these, switching our strategy to when the markets are hesitant by not, say, taking these waiting for the retest of a breakout, because half the time it doesn't happen because you get a breakout and it just resets. It's just adjusting our strategy, like with hard support buys, to keep the probabilities in our favor. And does that mean trading less? Yes. Does it mean trading with less in terms of capital? Yes. Right. But why? And that's important, because ultimately we don't want to be, essentially all in a hesitant market, right? So you have to adapt to the conditions. And if the one thing I'll leave you with today is the best thing you can do as a crypto trader is be adaptive, right? And learn to assess what is happening in the market. You don't have to have all the insights into well movements. You don't even have to be paying attention to FOMC so much. You just have to know it exists, and you have to pay attention to these things like we've got on Bitcoin: higher high, lower low, understand the implications for each of those moves, and then adapt your strategy based on that, right? And a lot of the time it's very simple. It's, I'm only going to take these hard support buys in hesitant markets, or I'm going to switch to short selling if I get like a lower low in the price action, and be adaptive like that. That's the key thing. Traders go wrong when they, in the crypto space, when they just do the same thing over and over again. And you can have like 2 months of incredible bearish short action, right? And you're shorting the market and you're making so much money, but that will not last. And you can keep shorting the market, making all your money. But if you don't put your head up, look around and see what's coming next and what you need to do in terms of adapting. Like, for example, it looks like this is the market starting to reverse now. I need to back away and stop shorting it, right? And just wait and see what happens. That is what gives you the ability to remain a trader, right? And consistently make money regardless of the weather. Now, there's always going to be a ship captain who's going to say, right, the weather out on the ocean is too much to take the ship out. But half the time they will go out, they will just adapt their route, they'll adapt their system, they'll adapt their speed, their direction, and whether they go through the narrows or whether they go through here or whatever, right? And that's what you need to be as a crypto trader, okay? So it doesn't mean that tomorrow's altcoin gems is going to have 5 setups which are going to go to the moon. It doesn't, right? And you should know that as crypto traders by looking at this Bitcoin chart, right? But knowing that will allow you then to pick the setups which suit your style and suit the trading conditions, right? And I try and, of course, do that work for you as well. And I'll talk about this tomorrow. But ultimately, that's the whole game. So the reason why I promote people, having a little bit of independence, right, is because you have to learn to decide what you're going to pick. It's like, so you go into an iPhone store, all these metaphors are getting out of control. I'm so sorry. You go to an iPhone store, right? Your gran goes into an iPhone store and she wants to buy an iPhone. She doesn't know what she's buying. She'll buy, and she'll just buy whatever they tell her. Like, oh, you want the iPhone 17 Pro Max with 500 a terabyte of storage. And the reality is that if she just has a little bit of information about what she's doing, she'll be like, well, I don't need a terabyte. I don't need that. In fact, I don't need the Pro because I don't ever take photos, right? So, and this is the whole process. And it's like with anything in life, right? Know what you're doing, take control of it, and then you'll be successful. Because ultimately, my trading style, James's trading style, is going to be very different to yours, right? And you may not like, I might like trading bump and run setups, right? I might like trading these sort of things. You might not, you might hate them, right? They just might not work for you either because of your schedule or whatever. So that's what I want to, this is the whole point behind this chart here and these question marks, right? It's not just to get clicks and comments. But let's have a look. Just before we finish, the recent BC's drop has made me somewhat uncertain about its long-term price outlook. Bitcoin just broke the strong support level and altcoins are even worse condition. Well, that goes into the whole thing about buy fear, right? Sell greed. Okay, so there's always an opportunity when people are feeling this way, and it's all important to recognize that. You go back a few weeks with Bitcoin update, and there's that is fear the signal. There's a whole video on it. Go and check it out. It was okay. It's okay, right? But go and check it out, right? Because this is the thing. We want to be mindful of the opportunities which the altcoin market, as an example, is giving us. Now, where is that? There we go. We want to be mindful of things like this because we want to capitalize it. Because by the time everyone else has realized, oh, altcoins are moving again, we've missed our opportunity. So we have to be very mindful, right? And I'm doing this at the moment, but we also have to be cautious, right? Which means lower position size, smaller position sizes, etc. And then we'd be very adaptive. I'm being honest, I might be wrong, but lately cryptocurrency is starting to look like a bit of a Ponzi scheme. Yeah, well, starting to. Look, most of crypto, the projects, the assets have no use case and are just a money-making scheme, right? I don't want to point fingers at certain high-profile populist leaders at the moment who have their own tokens, but that's the deal, right? They're money-making ventures, right? Now, the trick is to be like everybody, is to listen to people like MD and have that insight, because you want to be looking at things skeptically, right? You want to be looking at it, and no one's suggesting that. I mean, so Solana has a use case. Solana has tremendous opportunities in terms of all these sort of things. It's legitimate. So, if you only want to trade legitimate stuff, then that's fine. But there's nothing wrong with trading, a shit token. There's nothing wrong with trading it as long as you know it's a shit token, right? Because then you can adapt your position size. And as we were talking about with Funfair earlier, which is very volatile, you're adapting your strategy, being very mindful of that. And if you feel that this asset has the rug pull might happen, then you can trade that. You can be the one taking people's money, right? But the issue in the crypto space is that you'll have people. I mean, God, on YouTube all the time, the comments after every video I release, there's just all these spam comments saying, Canundun or whatever is going to the moon or whatever, and it's all nonsense. So if you listen to that, then of course you're going to get tied up. You're going to get wrecked, just like a Ponzi scheme, right? At best, right? So MD is absolutely right. But the reality is that if you can just recognize what a charlatan is, right? And you can recognize the person in the market who is essentially trying to take your money and is trying to sell you something of worth. If you can just have that basic common sense, which we all tend to have, and bring it into the space, as you're looking at it through the window of TradingView or Coinigy or whatever, right? Then you can be okay. Because it's okay to be like, oh my God, I'm the boat I've just got, I want to get across the river, but the boat's got a hole in it. And then you can look at it and like, what, actually, what's the rate that this is leaking at? Can I actually get across the river with this hole? And if the answer is yes, then there's nothing wrong with getting in the boat and going across it. You just have to be aware that there's a hole in it, right? And you have to adapt, right? Whether that means bucketing, watering out, or if you see a boat which has got so many holes in it, it's just too risky, then you don't get in it, right? So it's this, honestly, I sound like Dr. McCoy from Star Trek with all these ridiculous metaphors. So I'm going to stop, but really good conversation, folks. Really good conversation. No one is suggesting crypto, of course, is the golden chalice of security and safety. It's not, right? But that's why it's volatile, and that's why it's fun, because that's where the money is ultimately, and that's why we're all here, right? We don't want to be, trading penny stocks. We don't want to be making money off, whatever 20-odd% returns we get from traditional stock market every other, and that's great. It's super duper, right? And you can make money off that, right? But when people choose to move from stocks, commodities, and whatever into crypto, right? It's, you've got to make the decision rationally and realize that you are moving from a safe point of safety, right, to a point where you have to be a little bit more on your toes, right? But ultimately, that's where the money is as well. All of these opportunities. So, yeah, it's very, very exciting for sure. But you have to be cautious. But anyway, thank you for everyone for joining me. I feel like I've been ranting again today. It was only supposed to be a short one. James has a video out today, a tech video. Please make sure you go and check that out. It's awesome. James will also be back on Sunday with his regular stream. Totally cool. Always check it out. The Sunday stream is fantastic. It's really good positioning in the weekends to discuss the markets from the week before and what's happening in the weekend. And I'll be back, of course, tomorrow with altcoin gems, which we've talked about already. But that's it for now. Thank you for joining me. It's been a pleasure to be here. Thanks for having me. And sorry for the dodgy start. I'm going to go apologize to James for wrecking his live stream for Sunday. But take care for now. See you later.